Hey everybody, welcome back to the One Step Better Business Podcast with Mike and Matt. Thanks for tuning in. Matt, you having a good day?
Hey man, I'm having a great day. How are you doing?
I am doing really well, Today's going to be a fun topic.
Okay.
You know, Patrick Accounting happens to be a tax accounting practice, or tax is one of the things that is in accounting, is maybe a better way to say that. And because of timeline and where we're at in the calendar, everybody, or at least a lot of people, especially business owners, have tax on their mind. So we're going to talk today about why owing more in taxes is actually a good thing.
Are we just trying to light stuff on fire? Yeah, this is a great topic though. Honestly, this is something that comes up, but this is not what most people's mentalities are.
Yeah. How many times have you really heard somebody say with a straight face that they really want to pay more in tax?
Well, the first time I actually ever heard this was when I was working for Arthur Anderson, and my boss said, my goal is to one day pay $1 million a year in taxes. And I went, are you out of your freaking mind? And then I went, wait a minute. In order to pay $1 million, he would have had to make pretty good money.
Yeah.
And so that light bulb kind of clicked for me too. I'm like, hey, that actually is not a bad goal.
Yeah.
So that's kind of where I remember hearing it. I have had clients go, well, I would rather pay more this year. I'm trying to get a loan for my mortgage. I want to make sure that I can get approved on a mortgage I really can't afford. I'm like, let's talk that through a little bit better. But most of the time it's, I don't want to pay any taxes.
Yeah.
So
yeah, I think most people don't really think paying taxes is, I don't know if good is the right word. Nobody likes to pay taxes.
Yeah, taxes suck.
Taxes suck. Yeah. So we're going to talk about that today. Some of the things on what may make a person pay more in tax, why that can be a good thing, but also it's not always a good thing because there's ways to maybe not do that. So, but before we get in too far into that, we got a fun question today.
Must be so good. You're almost blushing.
It's blushing. If you put an entire meatloaf, so think you have a meatloaf.
Okay, got it.
You got a whole big old meatloaf straight out of the oven, and you put it between two buns. Is it now a hamburger?
Yeah, I think so. I mean, sure. Hamburger, meatloaf. Sure. Yeah.
Yeah.
You?
No.
It's a meatloaf sandwich.
It's a meatloaf sandwich. Yeah. So what makes the why I laughed about this is I've never really thought about the difference between a meatloaf and a hamburger.
It's exactly the same.
I think I don't like meatloaf, but I like hamburgers.
It's this other stuff in the meatloaf you don't like.
I don't like ketchup.
That's a problem.
And I think meatloaf is covered in ketchup.
Sometimes.
That's how my mom made it.
You should talk to your mom about that.
My wife has never made meatloaf in her entire life.
Because you said, I don't like meatloaf. Don't make meatloaf.
I don't think she likes meatloaf either.
Okay, that worked out well for you.
She probably likes meatloaf. Yeah. She probably does.
I'm not going to make any comments about that, Mike.
Where's the edit button?
Nope. That's not getting edited.
As soon as I said, she probably likes meatloaf, I knew right then I was hosed.
Your fault, Mike. Your fault. Disruptive content. We're all about disruptive content here.
Yeah. I don't like paying taxes at all. And every time I drive down the road.
Let's get back on topic.
Yeah, let's get back on topic. Every time I drive down the road and I see one of those signs on the side of the road that says, hey, get your $7,000 fast refund.
You're like,
I'm always like, I think I want to call that phone number right now and get my $7,000.
Yep.
Paying taxes is not fun.
No.
Not fun. And you mentioned earlier that you had a little bit of an epiphany moment whenever you started to change your mindset behind what goes into paying in tax. Talk more about why it is a good thing to pay $1 million in tax.
Well, the first reason is in order to pay $1 million in tax, you probably had to make somewhere at least around $3 million. That's today's ballpark bracket you'd have to be in to pay $1 million in tax. Making $3 million, it sounds like a good idea. I think that's something I wouldn't mind trying to figure out how to do. No, but the real answer to this for me is, paying taxes is a percentage of the income. That's the easiest answer. So, I mean, you've heard Dave Ramsey talk about this. It's like, hey, this is one of the worst tax strategies ever. Hey, go buy this really expensive car so you can get a tax deduction for it. And I'm always like, well, do you need a new car? Is that the car you want? And can you afford it regardless of the tax answer?
Yeah.
That's the answer. But it'd be like, hey, you should go buy this piece of equipment, or you should go buy a car. I'm like, well, if you don't need a car, you're going to spend $100,000 on a car or $60,000 on a car to basically get a quarter back of your taxes. And so while, taxes is still more, you're better off saving the other $100,000 or $60,000 or $50,000 you're buying for their car. So yeah, you see, like I was, the typical is the blue collar service, the guy who owns a construction company and they have a nice $100,000 F-250. And then, well, I got that for my tax deduction. I'm like, well, that thing's going to get lumber thrown in the back and it's going to get beat to crap. And you basically took $100,000 and lit it on fire to save $20,000. Doesn't make a lot of sense.
The real reason is I bought that to impress everybody around me.
Look at my
cool truck.
That's how good I'm doing on the construction business.
Yeah. Yeah. I agree with you. I hear another thing that I think is sometimes a bad way to think about tax is I don't want to make more money because I'm going to go up in tax bracket.
Yeah,
so I don't want a bonus because I'm going to go up in tax bracket. Is that flawed thinking?
That's very flawed thinking because your next tax bracket doesn't mean everything is going to be taxed at the new rate. Only their brackets. So think of it as like a ladder. Hey, you're on this. I'm on the second rung of the ladder, and I'm making $100,000. If you give me another bonus, I've got to walk up to the third rung of the ladder, but I don't have to pay tax on the whole rate on the whole three rungs. I don't have to pay it on the gap between the second rung and the third rung. And so you always want to make more money. Like there's never a downside to making more money. The tax consequence is fine. I mean, it is what it is. Now, when I think about paying more in taxes, I actually think about I always think taxes aren't 100%. Like you're not just doing this in a 1-year window. And so when I think about paying more in taxes, I may want to pay more in taxes this year because I'm going to get more of a benefit next year. So let's say rates are going up next year. Well, maybe I want to accelerate income into this year because instead of my rate being 31% this year, my rate next year would be 36% next year. Well, I'd rather pay the income tax on the income now with a lower rate. So I'm going to pay more in tax this year so that in the long run, my overall effective rate over a 3 or 4 year period of time is going to be lower. That's something that a lot of our clients don't comprehend until we start explaining, like, look, you should be looking at a 3 or 4 year effective rate, not a 1-year snapshot of time. We talk about, maximizing deductions and pulling deductions in this year. Well, that's great if the rates are going to stay the same. But over the last few years, we've had some rate changes. I mean, from one political regime to the next and to the next one, we're always going to have some rate differences. And so, and also just because you may have had a weird year where you're way up above norm this year in income, you could have had, some kind of substantial event, sold a piece of stock in the past, or you sold a piece of stock this year, or income was dramatically up, but it's not going to be on a plan. You might need to, you want to look at that overall. Don't think of it just as a 1-year little window of tax time. And so we try to explain that to clients as they come in. It's really a 3 or 4 year window you want to look at, not just a 1-year snapshot. It doesn't always come across that they love that answer. Which I get. Why? Because taxes suck.
Because nobody wants to pay tax.
Correct.
Yeah. So, well, to that, one of the things that Trump is talking about now is abolishing the IRS, abolishing the income tax.
Correct.
Do you think that is a reasonable possibility, regardless of how much he wants to? Are we just stuck with the system that we're in now?
They're going to have to collect taxes some way or somehow. So either they're going to have to do this, or they're going to have to go back to the European Union or the old, basically a tax on a tariff type program, or it could be on basically everything. It'd be almost like a nationwide sales tax. They're going to have some kind of consumption based tax. A lot of countries have implemented that and an income tax, which is what I probably would imagine they're going to do first. I can't imagine they're going to get rid of the entire IRS. I do think there is a number of people that a auto filing of your tax return is plenty applicable for. If you are not a homeowner and you're just a normal employee that gets a W-2, that tax return should be pretty darn easy.
There's not much strategy. I mean, if all you
no
have
strategy.
is a W-2, there's not much you can do about what it is.
And today's system is I have to submit my taxes, which I think causes some byproduct of that. I find this to be a tax on the poor is what I think of it is the ability for them. The government has had your money all year long. It's non-interest bearing tax savings. You know, if you're getting a tax refund, you given the government a loan for the year. And with that, they're using that money all year long. And then they give it back to you and they're like, here's your money back. I'm like, that's not a win. I just overpaid you all year long. And so I feel like, you know, having some self-filing requirement, like, hey, we're always in compliance. It could almost be filed every time there's a payday.
Yeah. I think it's interesting because it feels a little bit like we're so ingrained in the system that there is today to do something different has no chance of success. Because even I don't know, like you go ask multiple people, do you want to get a refund? Do you want to get and they all say yeah, because they don't realize that
gave the government a loan.
Yeah, that they're just getting their money back, and now that's turned into a very political stance on all the credits that are available, or
this is a refundable credit.
Yeah, and
so this is the government paying, so the earned income credit is a refundable tax credit. You got more money back from taxes than you ever paid in. Mm-hmm. So in theory, they're paying you because you didn't make enough money. That's just a welfare program. They can call it whatever they want.
Yeah.
And while I understand that there's a plenty segment of our population that needs support from the government in order to succeed, I would love them to tie that to either through, forcing them to go to education classes or community service or to volunteer time. Make it worth the society's benefit to do that, not just
here's money,
go live. And I'm like, you could have done a lot of things. Hey, look, in order to qualify for the earned income credit, you have to go take 2 classes a year or 1 class a year. And you can do it online. You can do it at a local community center. You can do it at a local library. There's plenty of places you could do that at. Well, there's no requirements. Here's the money. And that's not a great system. I think it doesn't help benefit the society in the long run to not help them up their skills, at least in exchange for those dollars.
Sure. Yeah. And I mean, that's going to be a hot button topic for anybody to jump on.
I always think back, think about it, first income tax returns 1913. I mean, so it's only 120 years old. That means we went about 135 years without an income tax. So obviously there was some stuff. Now, what triggered the income tax was World War I was part of it. They had to pay for that. They were still paying from the war of, the Spanish-American War. So there was still a lot of cost along the way that they were having to figure out how to fund the government. And then you had to figure in the New Deal, which happened in the 20s. And so if you see cycles of rates over time going back to 13 and then the different acts that happened, in the 50s and 86 Act and then 2013 Act, and there's all these changes. All that being said, most of the time it's related to we have to get more money in the pipeline to pay for all the things. Well, what should the federal government actually be doing? And that's where the politics of this all gets involved.
And it's not just federal even.
No.
I know, a little bit off topic, but I think it's crazy that we've gone from Boston Tea Party to now we have income tax, sales tax, there's state income tax, there's
local tax.
The city of Memphis is trying to assess bars downtown. I think it's an extra 1.5% tourism tax.
Yeah.
I think if you really start to abolish all these systems and turn it into one thing, you have an optics problem because then people are really going to start to realize
84% of my income is going to the government.
Correct.
And they're like, oh, wait, I didn't realize that.
I get a paycheck in which they're taking tax out of. I'm going to use that paycheck to go buy groceries, and they're going to take tax out of that to take to my house that I have to pay tax because it exists on land.
Yep.
And so to simplify this stuff, you got state, local, federal agencies involved.
It's like the profit first system for taxes. You got too many buckets I can put this in. Nobody knows where I'm spending all the money.
Yeah. It's a little bit of a shell game.
It is.
It's frustrating. It's frustrating.
So what do we say?
Taxes suck.
There you go. Taxes suck.
But income tax specifically, the more money you make, the more you're going to pay. That's
not the worst.
Progressive system that we're in. It's marginal though, so don't worry about, if I make an extra $1, that means that my other $10 is going to get taxed at that same rate. That's not the way that it works. Some misunderstandings there. I would say, going back a little bit, you said earlier, it's always a bad idea for business owners to let tax consequence decide for them what they're going to do.
Yep.
Tax should inform, never decide.
Correct. I like tax being a byproduct of me. I want it to be, I want to pay the lowest amount I'm legally allowed to do. Not a penny more, not a penny less. But I also want to do that over a period of time, not a 1-year snapshot. So you always have to be thinking through, what am I doing now? Am I robbing Peter to pay Paul? Now, there's obviously some benefit to that. I mean, you have some time value of money issues related around that, but you also need to think through, being aware of the whole game, not just the 1-year snapshot game. So it's kind of part of the plan we try to put in place.
Yeah, I think that's important. I think it's important to call out, because it is easy to look at, especially when we're in tax season right now. This is my, in this case, 2024 tax return, and it says I made X and it says I owe Y. And my only thought is, can I pay less?
Yeah, I want to pay
What do we miss? What can we do different? And it's easy to get caught up in that, in the here now, than think, well, it's actually better for me to go ahead and pay whatever it is then, versus, because it's going to save me X dollars now.
Yep.
It's easy to get lost in that.
Yeah, and some of the games we've seen is people have gotten on these trains. So it could be where they're prepaying spring expenses. Their cash basis, they're paying a bunch of bills in December. Well, that means you brought the deduction from 25 into 24 if we're talking about this year. Well, guess what game you have to do now? Because you put yourself into it. Next year, you're going to do the same thing, or you're going to have a huge difference. You're going to be like, well, I made even more money this year. I'm like, yeah, because you stole all your deductions from January into December. That doesn't help anybody. Yeah. So you're going to kind of look at it overall. And, I actually do expect rates to start trickling down a little bit. Inflation's still a little up in the air for us to know where we're at. So when you're doing your tax plan, you should be looking at it just more than a 1-year window. I've repeated that now 3 or 4 times. Hopefully that stuck.
Yeah.
But yeah.
Over a more than a 1-year window, and try to pay more in tax, as long as you need to pay more.
Yeah, and taxes suck. We've repeated that too.
Suck. Yeah.
Okay. Those are the themes of this podcast.
That's going to be the title of the podcast. Yeah, episode 148. Taxes suck.
That's right.
That should be the title, or at least the first 2 words in every single podcast episode that we release.
That's not going to be hard to do.
Taxes suck. Today we're talking about.
Yep.
Yeah. Cool. Matt, thanks for chatting with us a little bit. For everybody listening, I really appreciate you tuning in. Make sure you subscribe so you don't miss out on this valuable kind of content. Hopefully helping business owners like you make better decisions about running your firm, or your business, I should say. Thanks, everybody. Have a great day.